Hello everyone. I hope you can hear me. Sorry for a little late. Hello. Hello guys. Can you please clarify that you can hear my voice clearly? Hello everyone. I hope you can hear me. There is a little malfunction. Okay. So hello everyone. Sorry for the little malfunction happened a little. So welcome everyone. Welcome to the webinar and thank you very much for joining me today. Uh, Please join first. Very important class today. So, in our previous webinars, we learned how to identify support and resistance, understand market trends and structure, and draw trend lines correctly. Today, we will take the another step by learning how to read candlestick patterns. So, every candlestick tells a story about the battle between buyers and sellers. By understanding that story, you can better interpret what the market is doing instead of simply reacting to price movements. So, in today's session, we will explore the most important candlestick patterns, understand what they represent, and how to learn them and read them on real IQ option charts. Okay, guys. So, remember one thing, candlestick patterns are not trading signals, they are the way to understand market sentiments and make better chart analysis. Okay, so guys, without wasting any single time, let's jump into our slides. So this is the welcome slide here. So before we learn different candlestick patterns, let's first understand why candlesticks are so important. Every candlestick tells us a story about what happened during a specific time period. So it shows us where the price opened, where it closed, and how high and how low it moved. So more importantly, it helps us to understand the battle between buyers and sellers. So a strong bullish candle shows that buyers were in control, and vice versa, a strong bearish candle shows that the sellers were in control. So by reading candlestick correctly, we can better understand the market instead of simply watching the price move. So remember, candlesticks don't predict the future. They helps us to understand what the market is telling us right now. So as you can see on this screen here, strong bullish candle, buyers are in control, a strong bullish candle, and again a strong bearish candle which shows a bearish in control. And also here, if you can watch it, a small candle shows a market uncertainty. That's mean the market is don't know where to go. Okay, so every candlestick shows price open, price closed, highest priced and lowest priced. Okay, let's show this one in our next slide. Our next slide is about candlestick autonomy, what and how a candlestick actually formed. Okay, so now let's understand what is it. First, every understand a how many parts a candlestick actually have. A candlestick has six important parts. The first, when the price is open here, let me indicate this one. The price opened here, this is where the price started. Okay, and the second is where the price is closes. The price is closes here, the price closed, opened here and closed here. Okay, so this is the closing point of this price, and this is where the price is finished. The third is high. This is the highest point. If you see, this is the highest point the market, the price reach during this period. Okay, the fourth is the low. This is the lowest price here. This is the lowest price that reach during that period. So the thick middle part here, which is called candle's body, and the thick sticks like part here, which is called shadows, which is called rejections, and sometimes called wicks. So the body shows the distance between the opening and closing price. Okay, the body shows the distance between opening price of the candle and the closing price of the candle. Okay, and the wick shows that the price moved beyond the opened and closed before returning. So once you understand this part, reading candlestick patterns become much easier. If I just show you this one a little more closely, suppose the price opened here. Thank you, Jason. Stay connected. Today we will gonna discuss about a candlestick patterns, how you can identify on a chart which candlestick is strong, how you can understand market sentiment using a candlestick. Okay, so stay tuned. And we also have a 120 percent deposit bonus code, a surprise code I'm going to reveal in the future. Okay, so stay connected. So suppose the price opened here and it goes a little down, and then eventually buyers push the price in the upward direction and it goes exactly in the highest point. But here it didn't sustain, it got rejected by sellers, and eventually the price exactly closed here. So we got our open price, our lowest price, highest price, and the closing price. And this is how you can understand how a candlestick actually telling you. Candlestick has what I told you. A candlestick has six parts: open, close, and high, low, and also the wick points and the body points. And also vice versa for the selling candle also. The price opened here, the price closed here. This is the lowest point where the price actually goes, but eventually price goes rejected by the buyers, and eventually the price closed here according to the candle's time frame. So I hope you understand this one. Let's move to the next topic. Our next topic is about a bullish candlestick. Let's understand a bullish candlestick a little more advanced. Okay, so a bullish candlestick forms when the closing price is higher than the opening price. Just understand what I'm saying here. A bullish candlesticks form when the closing price is higher than the opening price. Okay, so this is the closing price. The color doesn't matter. Eventually, a lot of brokers like IQ option usually indicate bullish candlestick as a green and a bearish candlestick as a red color. So color doesn't matter. You have to understand a candlestick. Okay, so as what I said, a bullish candlestick form when the closing price is higher. This is the closing price, this is the opening price. So the closing price is higher than the opening price. The opening price is, the price is opened here, the price is closed here. So the closing price is higher than the opening price. This tells us that the buyers were stronger than sellers during that period. That's why they push the price in the upward direction, because buyers were strong. As we can see on this chart, the price opened here and closed at the highest level. So although the price moved up, and during that period session the buyers finished in control. So that's how it's happened. When buyers are in control, they will make bullish candles, and open price and the closing price are the highest, and the closing price are higher than the opening price. This is a very basic thing to understand about a bullish candlestick. So remember, one bullish candle does not automatically mean the market will continue in the upward direction. It simply tells us that the buyers had more control during that specific candle. That's why it closed as a bullish candle. So always read a bullish candle in the context of overall market. What I mean by that, if the market is in uptrend, because we already covered this one, a uptrend, a downtrend, because the market is in uptrend, that's why if you found a strong candle like this one, that simply means buyers are more stronger. Okay. So let's move to the next topic. Our next topic is about a bearish candlestick. As we already discussed about it, a bearish candlesticks form when the closing price is lower than the opening price. This is the opening price of this bearish candle. This is the closing price of the candle. So the price opened here, closed here. The price opened like this price of, suppose the price opened at 10 and closed at 8. That's mean the price is reduced. Okay, the price is reduced. That's mean the market is opened here, closed here. That means that's exactly mean that this is a seller's candle, a bearish candle. So when you that's why I want to teach you this one. The color doesn't matter, you have to understand the formation, where the opening price, where the closing price. Okay, this is the main thing to understand on a candle. A candlestick tells you very vast thing to understand, a lot of things a candle want to tell you. And then as the market is traded, the sellers push the price in the down and finish the session in control. As of course, if the price is here and push sellers the price in a downward direction and closed here, it has formed as a selling candle. That means there is a much selling pressure than the buyers. So there is a winning position for the sellers. On most trading platform, as I told you, including IQ option, a bearish candle is shown in red. So just like a bullish candle, one bearish candle does not mean the market will definitely continue lower. It simply shows that the sellers had control during a specific trading period. So always consider bearish candles together with the trend and support and resistance and other price action signals. So along with all the confirmation, if you use this knowledge about closing and opening price and the position of the strong candle, you will understand a lot of things in the market and you never be in loss. So let's move for the next topic. Our next topic is very important, how we can identify which candlesticks are strong, which candlesticks are weak. So let's see here. On the left, we have large bodies candles. Okay, this tells us that one side was clearly in control during that trading period. That means whenever you found this candle, this type of strong bodies candle, you can focus here. Notice the candles bodies are bigger than their wicks. That simply means the strongness of the position. A strong bullish candle with a good body means buyers are strong. A strong body's bearish candle means sellers are strong at that period of trading time. So the strong bullish candle shows buyers push the price higher with confidence, and the strong bearish candle shows sellers push the price lower with confidence. That's why they make a good body of the full candle. And now look at the right. Look at the right here. I indicated this one as weak candles. So these are weak candles because compared to the candles on the left, their bodies are much smaller. This tells us that buyers and sellers were more balanced and they are in indecision and neither side gained a clear advantage. That's why they can't move the price in a strong higher or strong mover. That's why candles look like spinning tops like this. This type of candles is called spinning top. I will show you in the next slides about it. So this tells us that the buyers and sellers are equal here, sometimes are balanced. So remember, a strong candle does not predict that the market will go next. So it just understand that it simply shows that which one is stronger and which one is weaker. So it's simply tells us that which side is shows good strength here. By understanding a candle, we understand, by understanding candle, we know that now buyers are gonna push the price in the upward direction, or the seller is going to push the price in the downward direction. Which one is going to take the power of the control? So this simply tells us that the power of buyers and sellers. And by watching these weak candles also shows neither the buyers are in full control, neither the sellers are in full control. I hope you get it. So in the feature is the full body means large body, small body, weak candles, and a market control. Strong candles means a market control and also strong momentum. A three candle. Let me give you a little. Sorry about it. Let me give you a little advice here. A little tip. The tip is, if you found three continuous strong candle in the market, that means it's a momentum. Okay, write down this one. Three continuous same color strong candle if you found in any trend, that's mean this is a momentum. Also a strong full big candles also shows as a momentum. Okay, that's how you can identify a momentum. So let's move to the next topic. Understanding wicks and price rejections. Great concept. So now let's focus on another important parts of the candlesticks wicks, sometimes called shadows, sometimes called wicks, sometimes called rejections. So look at the candles on the screen here. This one and this one, which this is a red one, this is a green one. So the upper wick shows, this is the upper wick, right? The wick, the candles started here, closed here. This is the upper wick, right? This is the lower wick. So the upper wick shows that the highest price reached before the market moved back down. So the lower wick shows the lowest price reached before the market moved back up by the pressure of buyers. So the long wick tells us that the market tried to move in one direction but couldn't stay there. This is called price rejections. Price reject in some areas, like if this is a red candle and it goes down, 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 and exactly from here it got rejected. That simply means from here to here, buyers are very much stronger. That's why they push the price up to here and the candle is closed. That simply means buyers are too much pressure at this to this point. And for example, a lower wick tells us that sellers push the price down, the buyers step in and force the price back up. Like here, the buyers is push the price in the upward direction. From here to here, seller push the price in the downward direction. According to vice versa for the low wick here, the price started here, closed here. The first time buyers started to push the price a little up, and then sellers push the price a little down from here to here. You can take it as example. So from here, the buyers push the price in the upward direction with their full strength, and they goes this above, but they didn't sustain here because sellers are stronger at this price. That's why they push the price a little down and close at here. So this week actually shows the pressure of the opposite direction, opposite color, opposite position. Let me show you in the chart here. If you focus sorry, if you focus this candle here, First, buyers started here, and then they pushed the price a little up, and then we got a strong selling pressure, push the price a very little down here. That simply means sellers were too much stronger here. Sellers were too much stronger. What about higher highs and higher lows? We talk about candlesticks, the deep candlesticks, candlesticks patterns, candlesticks wicks, and strong and lower, strong and weak candlestick. Today's class is about candlesticks. Okay, and in our next webinar we're gonna talk about how we can combine all our knowledge, support and resistance, lower highs and higher lows, and how we can combine all these and use our candlestick patterns, strong candlestick with rejection as a confirmation, so that we can trade on the market. Okay, so today class is about understanding the candlestick and important candlestick patterns. I hope you understand. And if you see here, from here to here there is a strong bullish pressure. The sellers first move the price in a downward direction from here to here, but from here buyers push the price very strongly and close the candle as a bullish candle. Looks like a weak candle, but it's not. It shows the power of the buyers. Okay, this candle simply shows the strong buyers are available here. The buyers are so much interested to buy at this price. That's why they push the price from here to here and eventually closed this candle as a bullish. Vice versa, if you focus on the left here, the sellers started to sell from here, but eventually from here to here buyers push the price a little up here. Very strong rejection we got here. That simply means from here to here, after buyers push the price a little higher, but sellers were too much strong, they were too much interested to sell at this price. That's why they pushed the price in a downward direction and this closed this price as a bearish candle. That simply means a strong bearish candle. A bearish candle with a good upper rejection simply means a strong selling pressure. I repeat, a selling candle. A bearish candle with a rejection from the high here. This is the highest point. Rejection from the high here, rejection from the top simply means a strong rejection from the seller. Buyers tried very hard to push the price in the upward direction, but eventually sellers push with their full power. They got rejected and make this candle as a bearish candle. That simply means a strong selling pressure. So wicks don't tell us what will happen in the market next. They simply shows us where the market is rejected higher or lower prices during the trading period. Okay, long wicks often indicate price rejections, showing that buyers or sellers fail to keep control at higher or lower prices. Like this one, buyers fail to push the price in the upward direction, and sellers got sellers fight with their full power with the buyers and they own, and that's why they make this as a bearish candle. So let's move to the next topic. Our next topic is about a doji candle. So this is a very good concept about doji candle. A doji candle simply means a sign of market indecision. So on the screen here, if you notice here, the price started here and closed here. Okay, on the screen you notice the opening price and the closing price are almost same. This creates a very small body, while the wicks can be short or long. A doji can be like this, can be like this, can be like this. This is called a gravestone doji. This is called a dragonfly doji. Okay, this is called a plus doji. This is a indecision doji. Okay, a lot of type of doji you will find in the market. A doji simply tells us that buyers and sellers were evenly matched during the trading period. So buyers tried to push the price in the upward direction, but sellers pushed it back and lower. but by the end of the session, neither side had gained clear control. So this is why doji is often called a candle of indecision. So, however, it's important to remember that a doji alone does not tell us what the market will do next. Instead, it tells us to pay closer attention to what happens after it and where it appears on the chart. Okay, I will show you this one. Think of a doji as a market saying, I am undecided right now. As we already discussed in our market structure class, that a sideways market. What is actually sideways market? Sideways market literally means neither buyers were in full control, neither sellers were in full control. Suppose the market is going in the upward direction like this, and you found a lot of candles like here. Okay, let me draw some candles here. A bearish candle, a bullish candles, and somehow you found a candle of indecision here like this one. If a candle formed like this one, that simply means already this area is a indecision, right? Already this area is a indecision, right? That's mean neither buyers are in control, neither sellers are in control, they were fighting. So somehow, as I told you, to pay attention what the price will do next. Suppose if the price will move in the upward direction, that simply means this candle shows us that the buyers are in control now. This doji shows us that in this indecision areas, neither buyers are in full control, neither sellers are in full control. So along with this, along with this simple doji candle means sellers and buyers are both are equal. So in our market structure class, we understand that how we can identify sideways and ranging market by understanding the support and resistance. The market will move in, if the market will move in between two support and resistance, that simply means a sideways market. So we understand in the lower time frame as one candlestick, this one candlestick shows the buyers and sellers are equal at the specific period of time. So let's move to the next topic. Our next topic is about a hammer and shooting star. So let's look two candlestick patterns that often catch a trader attention: hammer and the shooting star. So on the left chart, this is a Euro USD chart. I took it from IQ option binary. So on the left chart, notice how the market was moving downward before the hammer appeared. Strong down push, and sudden we saw a candle like this, a candle like this. Why we called it a hammer? Because it's look like a hammer. It's look like a hammer with a good lower rejection, as we already discussed about it. A bullish candle with a lower rejection means a full potential, a good buyer's pressure. So because it's look like a hammer, that's why traders called it a hammer candle. So sellers push the price much lower during the trading period, creating a long wick, but before the candle closed, buyers step in and push the price back up. As we already discussed about it, sellers tried to push the price down but eventually fell. Buyers push the price with their full strength and not only push the price in the upward direction but also make this candle as a bullish candle. And also we know that this is a hammer, and hammer also represent a strong bullish power. Okay, so this tells us that lower prices were rejected, showing that buyers become more active. Now look at the right chart, guys. Look at this right chart. Here the market was moving upward, and then Before a shooting star is formed, market was in the upward direction. Before we get a strong bearish candle like this one, a strong shooting star type candle, you can also call it a inverse hammer or inverted hammer. Okay, you can call it as a inverted hammer too. A hammer and an inverted hammer, you can call it inverted hammer too, or a shooting star. So buyers push the price in the upward direction, but creating a long wick after we get a selling pressure from here to here, a good selling pressure, because the sellers were too much empowered. They push the prices, not only they push the price in the downward direction, but also they make this candle a bearish. And this shows rejection of higher prices, indicating stronger selling pressure during this period. So both patterns tells us an important story about price rejections. They don't guarantee a market reversal, but they help us to understand the changing between buyers and sellers. So as we will see later, those patterns become much more meaningful when they appear near important support and resistance or trend lines. Suppose this was our resistance area, this was our support area. So if you found this type of candles as your support and resistance, these candles will give you extra confirmation that okay, in the support, if the in a support, as you already discussed about it, a support means a interest area of buyers. So if we found a buying pressure candle in an interest of buyers area, that's mean there is a high probability that the market may push in the upward direction. Vice versa for the sellers. So let's push in the down to the next topic, guys. Our next topic is about a bullish and a bearish engulfing pattern. Very good topic. Very popular candlestick patterns. Okay, guys, do you have any kind of questions you can ask me also? So far, we have looked a single candlestick pattern. Now let's explore the pattern that uses two candlesticks, which is engulfing pattern. We're gonna discuss about it. On the left side, we have a bullish engulfing pattern. Okay, this is a bullish engulfing pattern. So the first candle is a bearish candle. As we can see, the red candle is the first candle is a red, showing that sellers were in control. And the next candle we see a green candle, a bullish candle that completely covers the body of the previous candle. Okay, this tells us that the buyers step in with full stronger momentum and took control during that period of time. So now look at the right side, guys. Here the first candle is bullish, showing buying pressure. The next candle is larger bearish candle that completely covers the body of the first candle, and this is called a bearish engulfing pattern. It tells us that sellers become stronger and push the market in the downward direction. An engulfing pattern shows a clear shift in momentum between buyers and sellers. However, like every candlestick patterns we have learned, it shows never be used on its own. We only use these patterns when we found these patterns in support, resistance, market structural areas like pullback support and pullback resistance areas, higher lows areas, lower high areas, trend lines. And so if we found this type of patterns in the scenarios of market structure and support and resistance and trend line, we can use them as a confirmation, then we can trade. In our next webinar, I am again mention this one. In our next webinar, we're gonna discuss about it. Okay, so an engulfing pattern shows a clear shift in momentum between buyers and sellers. However, every candlesticks pattern we have learned, it shows never be used on its own. Okay, remember this one again. So its a real value comes from where it appears on the chart. So before I move in the next topic, I want to reveal the code of our today's webinar. I hope you can see the code now, guys. If you can see the code now, you can comment below, use the codes, and you'll get a 120% a deposit bonus. So let's move to the next topic. Our next topic is about single candles versus multiple candles pattern. We already about discussed about this one. So far we have learned different candlestick patterns. You may have noticed that some patterns are made of one candle while others needs two or more candles. Let's compare them, guys. On the left side here, we have single candle patterns such as dodges, hammers, shooting stars. Okay, this is a single candlestick patterns, and they can show rejections, indecisions, and or change in buying and selling pressure. And on the right side, guys, we have a multiple candle patterns like the bullish engulfing and the bearish engulfing. These patterns use two or more candles to tell a bigger story about how market sentiment is changing. Whether a pattern uses one candle or several, the goal is always the same to help us understand the market between understand the balance between buyers and sellers. Okay? So remember, no patterns should be reviewed should be viewed on its own. We only work on these kinds of pattern whenever we found this pattern on the specific time period, specific area based. Okay, support, resistance, market structure, trend lines like this. So always consider what the market is doing around it. Let's move to the next topic. Our next topic is about why candlestick patterns matter most. Very important, guys. We have learned how to identify candlestick patterns, but here one of the biggest lesson in trading. A candlestick patterns become more meaningful when it's formed at an important area on the chart. So the first chart shows a pattern here. The first chart here, which is indicated as support, the first chart shows the pattern forming at support. This tells us buyers are reacting at a price level where the market has previously moved higher. So the second chart here shows a resistance. Buyers push the price in the upward direction, and then we found a what we found here. Can you guess the candle? This is a shooting star candle. So this is found here. The single candlestick pattern is formed at a resistance. This tells us that sellers are becoming active at a price level where the market has previously moved lower. The because the market is previously moved lower, that's why we draw this as a resistance level, as we already know about it in our support and resistance class. And that's why in this resistance area we found a bearish candlestick pattern. A single bearish candlestick pattern also shows the pressure of the sellers. Okay, and the candlestick patterns may look exactly the same, guys. Okay, and also you can focus on the trend line here. A lot of people make mistakes here. The third chart shows a pattern forming on a trend line. This helps us understand how buyers and sellers responding as the market follows its trend. Market is moving in the upward direction by higher highs and higher lows, and exactly at our trend line areas, we found, because it's a bullish trend line we draw here, we found a pressure from the buyers. A candlestick with a lower shadow, that simply means a buying pressure. A bearish hammer candle. Okay, a candle can be a bearish hammer. Like, let me give you, this is a bearish hammer. This is a, I'm sorry, this is a bearish inverted hammer. Both talks different in different type of market scenarios. This is a bullish hammer, and this is a inverted bullish hammer. So if you found an an inverted bullish hammer, focus what I'm saying here. Okay, this is an inverted bullish hammer. Suppose the market push the price in the upward direction and simply you get a hammer candle at the resistance area. That simply means a selling pressure. What simply means? That simply means a selling pressure. A bullish hammer can also reverse the market in the downward direction, and also a bearish hammer can reverse the market in the upward direction. Okay, let me also give you an example of bearish inverted hammer, because we already know about a bullish hammer. A bullish hammer shows the pressure of sellers. A bearish hammer shows also a pressure of sellers, but in a different period of time. Like this one is hammer, right? This hammer, this sorry, this hammer shows a pressure of buyers. This hammer shows a pressure of sellers, but they formed as both a bearish candle. Suppose this is a support area. In a support area, if we found that a selling candles come down, 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 and eventually we found a candle exactly close at our support area, and we found, yes, we are gonna talk about this one. We think about it that we have to we're gonna make a webinar in Hindi language or not. Okay, stay tuned guys, stay tuned, subscribe to the IQ option webinar channel so that you will never miss a single webinar episode. So this simply means that a pressure for buyers. Okay, so I hope you get it. A different type of market scenarios, if you found this type of candlestick patterns, also they react in different. So let's move to the next topic. Our next topic is about reading market sentiment. What is actually market sentiment? Market sentiment means a candlestick shows you where the market wants to tell you. If you understand what a candlestick wants to tell you in the market, you will understand before the market move in the before the market gives you its next move. So let's focus here guys. So throughout this webinar, we have learned about different candlestick pattern, but remember, our goal is not just to recognize patterns, to understand what the market is telling us. Okay, so every candlestick reflect the battles between buyers and sellers. When buyers are stronger in the market moves higher, as we know that. When the sellers are strong in the market will move lower. So sometimes neither side has full control and the market becomes uncertain. By reading candlestick patterns together with support and resistance and trend line, we can better understand the current market sentiment. Instead of asking, is this a buy signal or sell signal, ask yourself, who is in control right now, buyers or sellers? That simply questions that simple questions will help you to read the market with more confidence and make better trading decisions. Suppose you are in the market right now and market moving in the upper direction, you don't know what to do. If you combine all these with, like, this is as this is the uptrend and you draw a support area here, because a uptrend means a control of buyers. So in the area, in the market of, in the trend of buyers, if you draw a support area, that simply make your trading setups a 10 times higher. So if the market push a little down and exactly close at your support area, if you found a strong candles, like as we already discussed about a strong bearish hammer type candles, that simply gives you a extra confirmation that okay, we get a good setup right here. You combine all these things. If your luck is good, you may found a trend line also at this period of time. That means you have an extra another trend line confirmation, means the market is gonna go in the upward direction. Okay, the trend is up, market close at the support area, we are at our pullback position, and we also get a trend line area, and in our trend line and our support area and exactly close also a candlestick pattern, a single candlestick pattern is formed exactly at this golden area. That simply means buyers will go in the upward direction with their full potential. Okay, I hope you get it, how you can combine all these in the market and get a full trading setup. So next, move to the next topic. Our next topic is, we already discussed about this one, putting all these things together. We have covered the key building blocks of candlestick analysis. Let's see how they work again. Let's show this one, guys. Imagine you are looking at a chart instead of focusing on just one single candlestick. Start by asking a few simple questions yourself. First, what is the market trend right now, and is the price is moving down or is sideways? Next, ask yourself, where is the current price right now? Is it near a support level or a resistance level or a trend line? Then look at the candlesticks also. Is it showing strength, rejections, or indecision? Combine all these. Okay. And finally, ask yourself, what is the market is trying to tell me? When you combine all of these observations, you will get a much clear picture of what happening in the market, and you will get a very excellent setups in the market when you combine all of this together. So remember, successful traders don't rely on a single candlestick patterns. They combine all different pieces of information before making a trading decision. The best trading decision come from combining trend, key price levels, and candlestick analysis, not from relying on a single pattern. I hope you get it. Here we found market is push, market is making higher highs and higher lows here. Higher highs and higher lows. This is an impulse pullback and continuation move. We get a high here, a resistance area. We get a support area. Also, we get a previously supported, previously drawn a trend line also. That simply means, and we also get a strong bullish candle here. That simply means buyers are in full power, and we can think about it for buying position. Okay, I hope you get it. So let's move to the next topic, guys. Our next topic is very important. If you follow, if you focus, if you follow all these things, all this checklist before you enter a trade, before you jump into trading, I think you will never be in loss again. Okay, you will never make any false decision, you will never make any wrong decision in the market if you follow all this when you enter the market. This is called a candlesticks analysis checklist. So before making any trading decision, it is good to have it, ask yourself a few simple questions. Start with the trend. Is the market is moving up, down, or sideways? And next, check whether the price is near an important level such as support, resistance, or a trend line. Then look at the candlesticks. It is showing strength, price rejection, or indecision. If you recognize a candlestick pattern, ask yourself what is telling. Ask yourself what it's telling you about the it's in balance, or it's in at the buyer's area, it's in at the seller's area. So ask yourself what the candlestick actually is formed. Okay, so finally combine everything, yeah, you have observed before making any decision. Okay, so let's do one example here. Suppose you are now going to trade in the market, just enter the market. What you are gonna ask yourself first, What is the trend here? Okay, let tick mark. Suppose the market is in uptrend. Okay, we get an uptrend. And the second is the price near an important level? Okay, the price is near because this is an uptrend, the price is near a support level. We get it. And then the third is, what does the candlesticks tell me? In a support level, if we found a good price rejection, we get a good price rejection. Okay, and the fourth is, do I recognize a candlestick patterns in a support level? What we getting here, guys? A bearish engulfing pattern. Okay, combine all these, we get a decision right now. So who is in control? Because buyers are in control. And in a support level, we got a price rejection, we got a bullish engulfing pattern. That's mean buyers are in control. Okay, the checklist helps you to slow down, stay objective, and avoid making decision based on just one candle. And the more consistently you follow this process, the more confident you will become when reading the price charts. Okay, so if you combine all this together, you will never make any mistakes. Okay, people what beginner what just make, they get a candlestick patterns, a support resistance level, they just simply trade it without doing all the checklist, all the analysis. Okay, so remember guys, always check this analysis, check all the checklist, then you will make your decision. So let's move to the next topic. And next topic is about live chart analysis. Okay, let's find out in the live IQ option chart how we can get a trading setup. Let's see. Okay, let's find out we have a good position or not. Very good position we get here, guys. The market is in uptrend, making higher highs, higher lows, higher highs and higher lows. Also we get a trend line. Also we get a support area. If you focus here previously, if I hope here previously we got a support area here, we got a support area also. So at this area we get a lot of rejection, a lot of price rejection. If I just zoom in here, just let's draw with the IQ option trend lines. Okay, we draw our trend lines from here to here. We draw simply, market naturally come to our trend line and give us the position we already talked about in our trend line classes. If you miss this one, watch it. And how we can draw a resistance here, because the price is rejected and get a closed downward direction, so we can take this one as our support zone. We already talked about it. We always draw our resistance and support as a zone, not a single straight line. So what we get, a previously tested support zone, we get a good trend line. Market is also uptrend right now, and market is giving, and all the things we get here in a pullback area. The price is moving in the upper direction, making higher highs and higher lows. Market simply exactly close at our level. This is a pullback area. Okay, market, this the, if you focus on the bullish candles, the bullish candles have, they looks like they are weak, but they are not weak. If you focus, their upper rejection is low than their lower rejection. As we already discussed about the in the rejection section, if we found a bullish candle with a lower rejection, means a strong bullish pressure. If you found a bullish candle with a upper rejection, that simply means a weak bullish candle. Okay, so if you cause here we found these candles has a very good lower rejections, but the bodies also looks very small. Here we got a indecision candles also. So how we can trade here? we can trade here after a strong momentum type candles appear like this one. This is a strong bullish candle. Those candles shows indecision but also a rejection from the lower, means buyers are trying to get in the market with the full strength. That's why they get rejected. They push the price from here to here, a good buyer's pressure. And also after getting this good bullish candle, we can trade for 5 to 10 minute expiry. Okay, that's how you will map, that's how you will combine all your information in the market. Then you will never lose any trade. Okay, you can trade with confidence. So by combining all this observation, we can build a better understanding of the market before making any trading decision. So guys, let's move to the next topic. Our next topic is about common beginner mistakes, some mistakes that beginner makes. Let's discuss about these mistakes here. The first mistakes, trading every pattern. Whenever they get a support level, if they get any kinds of uh, let's suppose you find a resistance zone and you also find a what, a inverted bullish candle. You just cannot simply trade on it. Okay, you just cannot simply trade on it without knowing proper market direction, without knowing proper market structure. You just cannot directly trade on it. It's a good setup, it's a good confirmation, but you just cannot simply trade on it. Okay, if you trade on it, there is you can find these kinds of area like here. If I show you a little example, like if this is a downtrend, you find this setup here. That simply means maybe there is a high possibility that after that candle, maybe sellers continue in the downward direction again. So do not trade on a single pattern opportunity. Okay, so let's discuss about the second mistakes. Our second mistakes is about ignoring the trend. As I already discussed about, do not ignore the trend. Trend is your friend. Always follow the trend, guys. Okay, do not trade against the trend. I replay this word again. Do not trade against the trend. Okay, always trade with the trend, with the help of market structure, with the help of support and resistance, trend lines, and what we already discussed today is strong candlestick patterns. And the third mistake is ignoring support and resistance. Sometimes people just trade just blindly when they get they follow the trend line, they follow all the market structure, but they just simply just enter the trade if they get any bearish or bullish spinning top and a very strong bullish uh, as well discuss about all these candlestick patterns. Okay, do not just blindly trade. If you find candlesticks patterns, okay, follow also support and resistance. As I already discussed about, combine all this together, then you will get the full picture of the market. So mistakes for the beginner makes looking at only one candle. What does actually mean that? Some traders also make decision after looking at only one candle instead looking at the surrounding price action to understand the full story. Suppose in the market is moving in the upward direction, and if you found a good strong bullish candle, so you simply just trade on it. You follow all this, but you make the important rule is you have to follow the rule only the position where the candlestick exactly close and appear. So do not just blindly trade when you found a strong candle. A strong candle does not mean nothing. It just shows a buyer's own or seller's own in the market in the specific period of time. So skipping your analysis checklist, very important guys, very bad mistakes. So always analyze your checklist. As I told you, I'm repeating this one, always check your analysis. Always check your, as you already discussed about this one, let's talk about this again. Candlestick analysis checklist. Always when you enter the market, ask yourself these questions, and if you found all these questions at the market trend favors your favors, then you will take the decision. Okay, I hope you get it, guys. Finally, don't rush, take a moment to analyze the chart using the checklist we have already learned today. Avoiding these simple mistakes can help you to become a more disciplined and confident trader. Successful traders don't react on every candlestick's analysis. They just complete the market structure before making any trading decision. I hope you get it, guys. Let's move to the next topic, our session summary, what we have learned today. Before we conclude today's webinar, let's quickly review what we have learned today. We started by understanding why candlesticks are important and how they reflect the battles between buyers and sellers. Then we learned the different parts of candlesticks and how to recognize strong and weak candles. So we have explored how wicks shows price rejections and how patterns like dodgy hammers and shooting star and engulfing patterns helps us to understand market sentiment. Most importantly, we have learned that a candlestick pattern should never be analyzed on its own. Okay, its meaning becomes much clearer when you combine it with all the trend, market structure, support and resistance, and trend line all together. Then you will get a clear picture of the market. Then you will be able to get a excellent market setups, trading setups. By following a structured approach, you will be able to read the price action with a greater confidence and make more informed trading decisions. I hope you get it, guys. Candlestick patterns helps you to understand the market sentiment, but they become more valuable when they combine with trend and key price levels. Okay, some key takeaways, some key advices I want to give you ending before closing the webinar, guys. So that brings us to the end of this today's webinar. Thank you for joining us and being a part of this learning session, guys. So before ending this one, I'm going to give you a little advice here. The first advice is read the story behind every candle, guys. Understand buying and selling pressure first. And then the second advice I'm going to give you is look beyond the pattern. Focus on what the market is telling you. Just focus on the market structure. Okay, if you don't understand what is a market structure is, you can watch our previous market structure class so that you can understand the full picture. And the third is always consider market context, support, resistance, and trend line. Combined with support, resistance, and trend line, you will get excellent trading setups. So the fourth is never trade one pattern alone. One single pattern does not means nothing. Okay, combine different prices of information before making any decision. Combine all the trend, market structure, support, resistance, and trend lines, and also strong candlestick patterns means it will give you a good trading setup. And the fifth is follow the same analysis process every time. Okay, as I told you, when you enter the market, ask yourself those questions on the checklist, and then if the checklist is favor in the market favor, then you can enter the market. So consistency build confidence, obviously, of course, guys. Always do not just shift one strategy to another strategy. Just focus on one single setup and do it, practice it every day. Consistency make you perfect. So guys, I think this is it. We are at end of our today's session. Today we have learned how to read candlesticks, understand price rejections, recognize common candlestick patterns, and most importantly, interpret what the market is telling us. So remember, becoming a successful trader takes time, guys. Practice and patience. The more chart you study, the more confident you will become in reading market sentiment. Okay, the market sentiment actually means combine all this together and mastering candlesticks. understanding the candlesticks. So in our next webinar, we will build on today's session by learning how to use candlestick confirmation as support and resistance to improve trading decisions. In our next webinar, we're going to discuss about a different scenarios of confirmations. Okay, so don't miss our next webinars. It will be held on next Thursday, guys. So stay tuned. And guys, until then, keep practicing, stay disciplined, and continue learning, guys. Thank you for choosing IQ option. We look forward to seeing you to the next webinar, guys. Thank you very much. Have a good day.